The Reserve Bank's expected to keep interest rates on hold tomorrow at 4.1%, but should it? Money markets are pricing in a 32% chance of a rate increase, while Bloomberg's survey of 27 economists shows 13 of them are expecting a rate increase. Stephen Hamilton from George Washington University is expecting a hold tomorrow. I caught up with him a little earlier.
Yeah, look, I'd be shocked if they didn't hold. So I think to hold at hold rates where they are rather than increase, that is. So I think the RBA. The thing people should understand, the way they should think about the RBA is that they don't need much of an excuse to do nothing, right? If they can get away with doing nothing, that's what they'll do. And I think the CPI numbers we got last week, which showed a reasonable step down in headline CPI, that is the kind of excuse that the RBA needs to wait and see how the economic situation kind of evolves, and then maybe next month consider a raise.
Yeah, but just looking at those monthly inflation numbers, the trimmed mean was still pretty high at 6.1%, and that's usually the number the RBA looks at. So you still think they'll see those figures and go with a hold tomorrow?
There's one question which is what they should do. There's one question which is what they will do, and those are not the same thing. So if you'll remember, a few months ago, the RBA very obviously should have increased rates, and they decided to hold. And that was found to be a mistake, and then they increased 2 months in a row after that. Now, I think they probably need to increase further. Rates in Australia are significantly below rates overseas. The US Federal Reserve is signalling probably 2 more rate increases are necessary. The Bank of England just increased rates by 0.5%, a huge increase. And Australia is way behind most other advanced countries in terms of interest rates, and yet my sense is the RBA is terrified, always in the back of its mind, that it'll do too much, that it'll maybe push the economy into a recession. And so, my sense is this inflation figure, even though I think the underlying inflation rate is still too high and suggests they need to go further, I think it'll be the cover they need just to give themselves another month to make sure that they haven't done too much.
Okay, well, look, rates are obviously 4.1%, you say, a lot lower than other economies. Where do you expect the cash rate is going to peak in Australia? How high is it going to go?
I'd be very surprised if we didn't raise by another 0.5 percentage point, right? So probably 2 more increases of 25 basis points I would think of as like a minimum, right? Now, how high the terminal rate is harder to predict, because I think there is a lot of uncertainty. And so, you have to understand that the decisions are being made in very uncertain conditions. Nobody knows exactly how quickly inflation is going to come down. The RBA's forecasts have inflation falling really precipitously. I think that's unlikely. But nevertheless, it is just a little bit unclear how high we're going to have to push that rate in order to get the requisite reduction in inflation. If they find, they hold this month, they raise next month, maybe they raise the month after. If they find, even after having done that inflation is sticky, that it's not coming down as fast as they need, then they will do more. And again, interest rates overseas are 1% higher than they are here. So there is a big headroom for them to do more if they need to.
The other challenge is the unemployment rate. At 3.6%, it's still close to 50-year lows. So how much higher is the unemployment rate really going to need to rise over the next few months to help bring down inflation in the economy?
Yeah, so I'm not sure that construction is helpful. So I don't know if we need to say we need to increase the unemployment rate in order to bring down inflation. What I would say is we need to slow the economy. Right. I think that the issue with the economic activity is stretched. Right. We have too much demand and not enough economic capacity. And one area in which that shows itself, that stretched capacity, is that if you're a worker, you can get a job, right, immediately. And we've got a lot of vacancies. We've got a lot of businesses needing employees. Now, if we cool the economy, then workers who leave jobs, will have a slightly harder time finding a new one, right? That's what it means to reduce economic activity. Some businesses will go out of business, right? Some businesses will pause hiring. Some businesses will do layoffs, and all of this will kind of loosen the labor market, and that will be an indication of a slowing economy that will bring down inflation. So it's not so much that the unemployment rate causes the inflation rate to come down, but that it's consistent with the slowing economy we need in order to contain inflation.
Stephen Hamilton from George Washington University, thanks for coming on the show.
Cheers, mate.